What is going on, everyone? It is your boy Mike. Give me 1 second, sorry. Let me adjust real quick to the camera. It's your boy Mike Levels. I appreciate y'all for tuning in. I hope everyone's having a great week. It's been an eventful week. It's been an insane week, but we love that, right? We need volatility in the markets. We need it. So, morning. Okay, cool. It's morning. Hey, what's good? It's about 3:30 p.m. Central over here in the beautiful state of Texas. Yeah, I hope everyone's doing good. What's going on? I hope y'all like the new traders so far. It's awesome. Again, ChartFanatics has big things planned. Riz is the GOAT. Riz is the GOAT for real, man. And the team too, you know what I'm saying? Everyone's putting in work, trying to provide high quality content, and it's just only gonna go up from here, right? We're just getting started, so stay tuned. Crazy week, 100%. Yeah, bananas. What a ride. I agree. What's up? Morning. Where y'all coming from? Morning time? This is crazy. I'm over here just wrapped up the day. You know what I'm saying? Trying to get on here, talk to y'all for a bit before going for a workout. How we doing this week in terms of trading? We have a green week, red week, break even. Amazing what ChartFanatics is doing. Yeah, Sergio, I appreciate it. Yeah, shout out to, you know what I'm saying, to Riz, the team, and, Josh, Marco earlier today. Marco's back. Hey, let's give a round of applause for Marco. My boy Marco is back. So, that's the GOAT too, so shout out to Marco, Tyler, of course, AB's in the Discord, at being active, having great calls. Same with Marco. But yeah, I'm just happy that we've made it to Thursday, because not every day is promised. So, and especially with the markets, it's the government shutdown. It's been pretty interesting in terms of price action, but this is all good experience, right? This is stuff that a lot of people probably have never traded during a market or a government shutdown. I missed Marco's show. Yeah, it was this morning. I was listening to some of it, and he gave really good quality gems, to be honest, a lot actually. Covered some of my losses today, lost a bunch yesterday. Yeah, exactly. That's just part of the game, right? Live to fight another day. You take a trade at a time, one trade at a time. So that's cool. That's still a good week as long as you have capital. That's the biggest thing. You don't want to blow up. Start, please. All right. Okay. Yeah, I got you. All right, let's do it. Cool. So what I usually look at or trade is what's in play, right? What we saw today, of course, the last 48 hours, right? We had FOMC yesterday. We cut rates. It was in line. I said that I thought, if we're not cutting 50 basis points, that dollar is probably going to continue higher, just because this was already priced in, right? And we also had a little bit of a hawkish sentiment from Fed Chair Powell. So I was bullish on DXY, which meant that I took shorts this morning on EU. And EU's been playing games, man. It's been a super disgusting price action lately, but today actually delivered, right? So, I can break down my analysis first on DXY. What I was looking at is that we were still, throughout the whole week, holding this daily fair value gap. And all of this, this is daily chart, 1, 2, 3, 4, 5 days of chop. We're in a range. Not much going on. Trades aren't working for both longs or shorts unless you're a scalper, then maybe, but I do intraday and day trading. So, I was just being patient last week, and then this week, just still holding on to the thesis that I believe that dollar was going to go up. I do think dollar can eventually spill over, but I think that we're going to at least maybe take buy side liquidity up here, maybe tag the 200 day and then roll over. And if that happens, then there's going to be a lot of big, long opportunities only because we're really generating, right here, trendline liquidity, right? So, and we know that the markets move on liquidity. So, if you're a market maker and you want the dollar to dump, which it should dump. If we're cutting rates, then investors aren't going to want to invest in dollars. But everyone knows this, and the market makers aren't going to make it easy for people that, of course, if you use basic, I guess, fundamental sense, it's like, okay, we cut rates, dollars should roll over, but yet dollar is heading higher. I just think this is manipulation. I think we continue higher temporarily for the rollover, and I believe that we'll grab trendline liquidity and come back to the lows, right? I still think this is a lower high from high, low, lower high. Yes, we're in a deep retracement, but we're really just in a premium. So until I see a strong bullish weekly candle close above and make higher lows, then I might change my bias. But for the time being, I still believe this is just a lower high, just market structure, getting ready to roll over. Maybe if not the end of next week, then maybe NFP. Who knows, right? Because we haven't had NFP. We were supposed to earlier this year. They pushed it back because the government shut down. So maybe next NFP will be a catalyst. Sorry, give me 1 second. Will be the catalyst, right? So what I'm looking at for tomorrow, for being a Friday, and we've had this move, I honestly think we have two options. We either continue, we could hold this fair value gap, make a higher low, and then continue higher until we get up here. Or we can have maybe a TJI setup if we fill in this fair value gap on the 8 hour. Because, my bread and butter time frame that I like to look on is the 8 hour. Sorry, let's see. Is the 8 hour, right? We can tag the 8 hour and then roll over on Friday for a temporary, if you want to get a quick EU long or something like that. I say EU over GU because EU has been stronger than GU. GU, if you look at both charts on the daily, GU on the daily, you can see right here is weaker than EU on the daily. So if I'm thinking of going for any, long, I'm going to go for the stronger currency, right? So I believe that EU would be a better case for longs. I'm not looking for longs until we grab these equal lows. I think Marco was also talking about that as well earlier this morning, but during London, we could roll over and then reverse during New York. I'm not sure if that's going to happen. We'll see. We do have news, I believe, tomorrow at 8:30 Central. I have to confirm on that, but, we need news. We need volatility. We need a catalyst to get us some volume, right, and liquidity to get to where it needs to go. So I want us to grab sell side. If we can do that, then there's probably some potential areas for a quick long scalp, or it might be time to go long. I'm not sure yet. All I know is when price hits these levels, I will have a game plan ready, just depending on what the hedge funds and institutions are showing, right? Like, they always show their hand on what they're trying to do. You don't need to be the first person to cast the bottom. All you need to do is follow where the big money's going, You had chances to get in long here. You had chances to get in short. And this is on a daily time frame. This is why I'm very big on looking at the daily. I look at the daily every single day. After the daily close, I'm looking to see how the daily formed. I'm trying to see if there's a continuation lower, higher, what the direction is, or we're consolidating in a range. But I look at the higher time frame, I'd say about 80% of the time. I look at the daily, then I go down to the 8 hour, 4 hour, and then I'll go to the 1 hour for maybe entries or 15-minute. Can do a live setup and take a trade. Yeah, I can. Let's see what's a good trade. I mean, right now, the only thing I'm in currently is EU shorts from earlier this morning, just because I'm targeting these lows. So a potential trade, I would say, if we can get price to come up here, I honestly do not mind taking this short. So what time is 4 minutes? Yeah. I like this fair value gap on a 15-minute from high to low. Fibs is right around 61.8 to 79%, which is good. Yeah, so let's just go ahead. Let's go put alert, add, go short. So let's see. Honestly, don't need to have my stops be that tight for this trade. This is good right here. Because for me, I'm not a type of guy that's looking for the 10 to 1s, 7 to 1s, 5 to 1. Well, 5 to 1s is cool. I think my minimum for me, 2 to 1s, anywhere between 2 to 1 to 5 or 6. If I do get it, that's cool, but I'm not gonna force that trade. Like if I see a good, smooth 3 to 1, I'm taking it every time because I'm a singles and doubles type of guy. If there's a home run there and I see it, of course I'm gonna take it if the setup looks good. But from day to day, as a professional trader and a guy that wants to have, minimal drawdown and have good equity, higher lows, I'm going for 2 to 1s, 3 to 1s. I don't like the volatility, right? Like I like volatility when trading, but not when my P&L. That makes sense. I prefer smooth, slow, and steady type of grind. And I believe that accumulates and compounds. And then from there, you end up having great months just from being calm, cool, and collected as a trader. There's not one way. I just matches my personality more. I'm very chill and calm, so my trading matches my personality. Whether there's other guys, on the team that that they're very, energetic, and their trading matches that. They're going for the home runs, example, Tyler, and it works for him. You know what I'm saying? He's trading based off his personality. And once you figure out once you figure out your personality with trading and combine them both, man, that's honestly the goal for anybody in here. You want to find a style that matches your personality so that it's easier for you to keep calm during drawdown periods, during a drawdown in a trade, just because you're confident in the strategy and it matches your personality. So why didn't you change your bias when EU was going higher earlier this week? Because to me, again, I'm looking at the daily chart from high to low. This was 61.8. This is why I say I look at the daily candle. So if you're looking at the 1 hour, 4 hour, you're thinking, okay, we're going highs and we're probably gonna continue higher. For me, I'm looking at high, low, lower high, lower low, lower high, lower low, lower high. Yes, higher low, but when you have equal lows like this, the odds of them not getting touched are very, very low. Very, very low. Doesn't mean it doesn't happen, but it's very, very low. And then I'm trying to put in my head a thesis, right? We have, FOMC coming up, and the only way I could see the dollar dumping is if we go 50 basis points or if Fed Chair Powell is super dovish, and neither happened. So when I saw that, I was like, yeah, I'm definitely looking for shorts, because I was looking for shorts all week. I was looking for shorts a couple weeks ago, but I know the long is coming. And then we're also in a daily fair value gap, and we've barely tapped it. I think we may even tap it one more time before going higher. So my thesis doesn't change until we, make a new high, right? We made this higher low, cool, but we didn't break this high over here. So yeah, I might be late to the party on that long, but I know the potential of this long. Once it starts going, we have a lot of room, because what I would do is I'll use my fibs from low to high and target the new highs, and you know what I'm saying? So I'm okay being late to the party on these longs, because I know how many trades I can make on these longs, right? This is the daily chart. This is gonna last for weeks, if not months, just like it did before, So you could have got in over here, would have made a killing. You could have got in over here in longs, would have made a killing. Even over here, still would have made money. You don't have to be, again, the first person. You don't have to be the first person in a trade. Just wait for the big money to show. And the big money wasn't really showing. If you look at the daily the closures, it's slowly going, right? But then boom, we get a big move. This is institutions. The engulfing candles are institutions. They're letting you know, like, we're not ready for the longs here. We're pushing down. Let's see. Let's get some, yeah, please, if you have any questions, keep going with the questions. I'm here, yeah. Riz, my boy, thank you, Riz. I appreciate you. But yeah, that doesn't mean that longs couldn't have worked. They could have worked for sure. But again, my style of trading, my strategy, I'm also using my EMAs. I use the 50 and 200 day EMAs. And they're also letting me know like there's strong resistance. We get below, you know, you can see my entries over here. But to me, I could see the case for the longs. I'm not saying I couldn't see it. I could see the case for the longs, but as a trader, you have to be confident in your bias and have strong conviction. And my conviction is that we're gonna have shorts, right? Again, I had a thesis planned. I went and watched Powell speak. He didn't sound dovish to me. We had 25 basis cuts. And again, we were consolidating on a daily fair value gap on DXY. So when we get consolidation, what's next? Expansion, right? Whether it go down, you know, lower or higher, we're still getting expansion. So for me, it's just a matter of just being patient. Do I think that DXY is going to fall? Yes, of course. Yes, I do. Just not right now, you know, but when it does tank, there's a lot of liquidity it can grab, right? We got the trend line liquidity, still got, you know, sell side over here. Yes, it grabbed it before, but if you're looking at the bigger time frame, we can still roll over down, you know, to these lows over here. You know, this could be a lower high, or this could be the start of a, you know, higher low, but we haven't broken above on a monthly for me to be like, okay, now we're officially bullish, you know? So honestly, yes, you can game plan, but you don't want to jump ahead. I game planned the night before, the day before, but on day of, I'm extremely locked in, and if anything changes, I'm very flexible. As a trader, you need to be very flexible. Yes, you can game plan, be prepared. That's very big, but you also have to be, you know, flexible. What do they say? Like, strong opinions, weakly held. I think I've heard that from a couple of different traders, senior traders have said that. So I can have my own opinions, but if the charts aren't matching my opinions, I'm not taking a trade. The charts were matching my opinions yesterday, so I took the trade, and I was okay with taking the risk. As a trader, you need to be able to take the risk. You know, win or lose, that's fine. You journal, and then on to the next trade. I had a really, really good day today, and I was like, cool, on to the next trade, right? You just gotta continue. You don't wanna get too high or too low, you know, because that's not gonna be conducive for your growth. You wanna grow as a trader. You wanna become a true professional trader. A true professional trader, for the most part, everyone's different, but for the most part, the ones I've seen that have gone and made the 50 mil, the 100 mil, the 200 mil, for the most part, they are pretty calm. They're pretty calm. There's times where, of course, where human beings will get emotional. You know, it can be annoying. You can get stopped out by a buck or a couple pips and it go your way. Those are moments where, yeah, it's kind of normal to crash out. That's fine. But even then, man, like, you should be calm. You should know what the risk is. And with that being said, too, I usually trade 2 or 3 times before I change to another thesis or another setup. Like, I give myself chances, right? Usually 2 max, but if it's an A++ setup, then I probably give myself 3 times, and that's it. No more than 3, because at that point you're over trading. It's like, come on, bro, you're just wrong, and that's fine. Or maybe you have the right idea but wrong timing, right? So that still means you're wrong. It's not the markets, it's just you're wrong, and that's okay to be wrong as a trader. You don't have to be right every time to make money. I know so many traders that have 30%, 40% win rates and have $1 million years consecutively, right? Like consistently with 30 to 40% win rates. You know, I always try to preach that you don't need to have a high win rate to be a profitable trader. You need to have a good strategy though, and you need to have good risk management, especially emphasizing on risk management. If your risk management is trash, you'll never be a good trader, you know, regardless of what type of strategy you use, whether it's support and resistance, supply and demand, Fibonacci ratios, harmonic patterns, ICT, you know, CRT, you know, it doesn't matter. None of those strategies will work with poor risk management. So you have to understand that. And, you know, human beings are just naturally greedy. When they're hot, they want to size up, which is fine when you have experience. But as a beginner trader, I wouldn't do that. I would continue to, you know, I would have a fixed risk as a beginner trader, right? When you're gaining that experience, you know, after a couple years or so, then you can start doing the asymmetric risk betting and, you know, risking more on A+ setups. But how do you know? You don't have the data yet. You don't have the confidence yet. You haven't seen different environments yet. So it doesn't make sense to be doing that so early. That, you know, that will come with time and experience. So, hey, tuning in from Wales. Appreciate your time. Yeah, of course. Good afternoon, Mike. 12 in here, but can't lose this valuable stream. Hey, I appreciate you, my guy. You're a real one. Thank you. Powell, he said something about quantitative tightening. What should you expect in the market? That I can't. I'm not sure. I don't want to give you wrong information. I know Mark would probably be better with that. I believe that was Mark yesterday. Was it Mark? I might be wrong, but I believe it was. He's more in tune with fundamentals. I use fundamentals a lot. I understand what quantitative tightening is, but I don't want to go into depth and be wrong when we have someone that's actually a fundamental guy on the team. Like, that's great. I was on the stream, listening and learning and taking notes, and I've been learning fundamentals for at least the last 7 or 8 years. So I know a good amount, but always down to learn more. Especially someone that's his bread and butter. My bread and butter is fundamentals and technicals, but I definitely know a lot more when it comes to reading price and charts and all that versus the fundamentals. But I understand fundamentals very well too. But when it comes to like quantitative tightening and how that's going to affect the market, don't really know, to be honest. I don't really know. That doesn't sound bullish to me. It seems, less spending, releasing. Yeah, doesn't sound bullish is what I could say, but I don't want to go into depth in something that I'm not, a master at or understand it to the T. Because what's the point of trying to explain that if, you don't have all the ins and outs? It's crazy when people try to, I'm not going to BS you and give you a fake answer is what I'm trying to say. But yeah, any more questions while we're looking at ES? I said ES, EU. Okay, we're getting there. So my game plan with EU is I'm wanting to see if we can get to this 15-minute fair value gap, tap the 15-minute fair value gap, have sellers show their hand, and then from there go short, right? For the continuation to grab these equal lows on a daily. This is the game plan because I don't believe EU was done heading lower yet. This right here is a magnet. I believe that the odds of us grabbing these equal lows is above 60%, for sure. Doesn't mean it's going to tomorrow, but it's above 60%. What would be the best tips for back testing in TradeZella, adding tags to losing and winning trades? How you do it? I don't really back test as much anymore. I used to back test a lot more, like, I don't know, back in like 2018, 2019. I do journal in TradeZella and I do tag my losers and winners, and I tag them based off the time of day. So either London session, New York session, Asia session, the type of strategy I'm using, my mental health. How was I on that day? So it's either happy, mad, sad. I mean, that's really good. I know it's crazy, but when you tag that and see how many losers you have when you're mad or sad or just mellow or neutral is fine, right? I have happy, neutral, mellow, sad. There are days where you will be sad and still want to trade. You want to tag those, whether it be, I don't know, it could be a range of things, but you're tagging your mental health just to see if there's any type of correlation, which there should be. I mean, 9 times out of 10 there will be, and that will kind of reinforce you to like not trade on those days. I also tag by, is it A plus setup, a B plus setup, a C plus setup. Sometimes you do want to take the C plus setups, which is fine, which only with low risk, right? Just so that you can get a feeler of, okay, how does this, trade do? Even though it's a C plus setup, I still like the setup. I usually just trade A and B plus setups. I only trade C plus setups if I'm in deep profit. Then I'll try new things, and even then I'm probably doing it with a challenge account first before doing it on a funded or live. And then from journaling, I use the DRC from Lance Brystein, the daily report card. I use that. It's very clutch. I actually have a goal of using it every day straight in 2026. Like, that's my challenge for myself. You should do that as well. They have a template, put that on TradeZella, and I like it a lot. Honestly, it's one of the best templates I've seen. I was stopped out twice on the euro this week trying to go long based on DXY quarterly and monthly being bearish. Do you also agree DXY is bearish on higher time frame? If yes, why? Yeah, so I was saying, I do believe that DXY is bearish, but I do believe market makers are going to definitely take over. We can believe that, but they're going to grab as much liquidity before rolling over it. And that's my thought process, is that these guys, everyone, is expecting DXY to roll over. So when everyone's expecting that, the market makers are going to go the opposite way to grab as much liquidity as they can before rolling over. And if we look from high to low, right, high to low, we just got above 50%, 61.8% is still around this area, right? So that's the golden ratio. I use anything above 50% to 79% is my range. That is my levels for short. So we can continue to go up to 100.754 before rolling over, right, on the weekly. And we would still be bearish. We would still be bearish. So I hear you on that. The longs did look good. I didn't take the longs because I already had my thesis in my head. Doesn't mean that I couldn't have switched, but when I saw these equal lows, they're just too clean. They're just too, sorry, this is DXY. I guess for DXY, I'm mixing it up with EU. With DXY, the reason why I was still long is because we're still holding the daily fair value gap. Had we broke below this daily fair value gap and made a lower high, I probably would have changed my bias, but we haven't. But we are building liquidity, which is going to be great for when we do roll over, because price likes to target liquidity. But I saw we're consolidating and we were literally just making a higher low and still holding this daily fair value gap. And you can call it an inverted fair value gap too, right? Because we really inverted as well. So I was like, I need to see this break above or break below with volume like this for me to be truly bearish the dollar. And I'm okay missing the early move on EU longs, because if we are in fact bearish the dollar, we have a long way down, so there's going to be multiple trades made while the sell-off happens. So there's really no rush. And again, just matches my personality. I'm really chill. I'm really patient when it comes to trading. At times, there's times where I'm like, all right, like, bro, I've been in a trade for 4 or 5 days and we haven't moved anywhere. That's when it can get frustrating. But for the most part, I'm chill. I let the trade do its thing. Whenever I place the trade, I'm not looking at the charts all day. I look at it from time to time, but I'm not looking at my trades all day, because you start getting in your head, you start making up scenarios, and that's how you get to micromanaging your trades and getting out too early and then seeing your trades go without you. And you know why. You made up 100 different stories in your head of why this wasn't gonna work. That's fear, and that's fine. It's normal. You're dealing with money. You don't want to lose your hard-earned dollars. So for me, I just conditioned myself. I knew the risk before entering the trade. I took the trade. Now let me go live my life. If the trade works out, great. If the trade doesn't work out, great. Just chill. Just chill. You don't want to overcomplicate trading. Trading is already hard as it is. Don't overcomplicate it. Keep it chill. Have the goal for everyone here is not to be on the charts 24 hours a day. Ideally, you want to be on the charts 2 to 3 hours max, as in really focused, and then looking at it throughout the day, and then living your life. That's why everyone wants to learn how to trade, so they can make extra money to go live their life. If you want to work a 9 to 5, there's so many 9 to 5s. Okay, let me not say so many right now, because the economy is actually not doing the best, even though the market continues to keep going higher. But that's another conversation for another day. But you know what I mean. If you really want to go work a job, you can do that. You don't have to trade and be on the screens for 24 hours a day. Initially, when you first start trading, yes, put in the time. Got to put in the time. You know what I'm saying? The first couple years, grind, sacrifice. But after you get your data, your experience, your chart time to 10,000 hours, all right, let's really now have a system where we're able to trade and also live our life, because we want to do this forever. This is a journey. The goal is to be able to trade forever and not stress too much. Life is already stressful as it is. Let's make money, have fun, and enjoy. Let's not stay and look at the charts all day and stress out and have a heart attack because gold moved $2 and you're looking at the 1 and 2 minute all day. What's the point of that? You're just giving yourself anxiety. You're gonna be 60 years old on high blood pressure pills, anxiety pills, codeine. What? Hey, you don't want that. I promise you don't want that. Sadly, PM sessions. So I know. You're right. See what's NQ's going on. Let me read these other questions. My bad. Well, I didn't know we were getting PM sessions. Yeah. We are, man. ChartFanatics is really doing it big. Again, shout out to Riz and the team. They're trying to get it to where we're on every single day. You get quality content, and that's the goal, right? Imagine having quality content all day, every day, and being able to learn from professional traders that have pulled money out of the markets, and taking notes from different personalities and applying what you like and what you don't like. That's what I did for many years with different traders, the different senior traders that I saw were profitable. I didn't learn the entire strategy, but I picked pieces from things I liked and then created my own strategy. And that should be the goal for everyone here, right? Would you suggest doing 200, 300 trades on FX replay to someone who's finding their edge? Yeah, it is good. It's good, but again, we're in different environments. If you're gonna be doing FX replay, there's pros and cons, right? Yes, you should do it. You should do it definitely, but again, 2 years ago or a year ago, we weren't having a government shutdown. We weren't having tariff wars. We weren't having, interest rate cuts now. If anything, we were hiking rates. So we're all in a different environment. You'll probably have different volatility, different price action, but it's still good just to see. I just say I wouldn't hold too much weight on what you find, but if you find that it's profitable, that's good, right? But don't hold too much weight and be like, I took 300 trades and my edge is 75%, so from now on, that edge is going to be 79% from here on out. That's not the case. Sadly, it's not, because the environments change all the time. Your edge for one season might be at 70%, and the next season it might be at 40%, or the next season it might be at 55%. We can't tell when, but we can tell how to be prepared when it does, how to adjust. When you're noticing that your edge isn't working as much, lower the risk, lower the size until you start seeing your edge working again, and then pick up the size, right? And if you're in an environment where your edge is really, really working, stomp on it, like higher size, bigger size, because it's not going to always be like that. The environment isn't going to always be in your favor. It changes, just like the weather. But you want to make sure that your edge can withstand winter, summer, fall, spring, all of that. Like, you want to make sure that your edge is strong and that your confidence and your mental is strong too. That's really, really big. And now we have, ChatGPT too, that can act as a coach, a trading coach. And you can use the voice as well, right? The voice command thing, and talk to it. So that'd be a good tool to use if you want a trading coach by your side. At the end of the day, you can talk to chat, tell it to emulate Wendy Rose off Billions or something like that. And then start asking it questions and having it coach you. I mean, we have the technology, which is insane, because in the next 10 years, we're probably gonna have robots in our apartments and homes doing stuff like that for us, cooking, giving us advice, which is crazy to think about, because it's like, wow, it's really like iRobot. And we know how that movie ended. So, wishing us the best, but yeah. Can't see your chart properly when explaining. All right. Well, I'm not explaining anything right now. I was just zooming in, unzooming, so sorry about that. So I called, shorts this morning as well for NQ, and took some shorts as well, just because of my thesis again. We cut 25 basis points. That was already priced in. We've been moving, gapping up every day on SPY and NQ. I just think this is a higher low being formed, getting ready to go to new highs. As you can see, yesterday's price action was disgusting, but we did sell off, come out. We took the highs today, buy side, and then rolled over. Now we're pushing. I guess Trump must have said something, because this is or maybe what time is it? 4 o'clock. Yeah, I guess right before the market's reset. And then we also have a daily fair value gap too that we're holding over here. So this will be interesting when this opens. Are we gonna grab all this liquidity? Why is it doing that? Sorry. Are we gonna grab this liquidity? Or are we gonna make a lower high and roll over? It's a hard one, because tomorrow is Friday. If I had to pick a direction, I would say we could, let's see what the daily looks like. Oh, nah, that's the daily. That's a hard one. It could go either way. You can see that in the indecision. This is the 24-hour. I use that a lot for stocks because of gaps, but I guess on a daily, Not even sure why. Yeah, I can't. I don't. We could fill in this gap first before heading higher, or we can continue higher. With NQ and ES, it's been up and to the right every single time, but we could fill in the gap. Let's see. Awesome. Do you solely trade from TradingView through broker, or you just chart in TradingView, place orders on different screens? Yeah, exactly. Yeah, I do all my charting on TradingView, and then I'll place my orders on different screens. I don't trade on TradingView. I know you can do that, and I've seen guys do that, which is really cool. But for me, I like to do it on other screens. Eventually, maybe when I get into futures more, because I'm trading mainly CFDs with different online prop firms, and I do trade live from time to time as well. But I haven't touched futures as much. I have a challenge account, like a 50K with Apex, that I need to start. I haven't started yet, and I've had it for like 2 weeks, so I need to get going on that. And I do plan on trying some other future firms in 2026. Just want to end the year strong and get funded with the challenges I have currently going on right now. So I don't want to multitask and do too much, because I also do a lot of different things, right? Being a portfolio manager, I'm already managing a lot of different things and a lot of money for clients, and also have my own thing going on, my Discord and stuff. So yeah, I'm doing a lot of multitasking, but you should be able to do that. If you want something bad enough, you don't really need to give excuses, right? You need to give solutions. I'm really big on that. A lot of people, especially nowadays, they have so many different excuses of why they're not profitable, why things aren't going their way, why life is not on their side. But it's like, one, your mindset. Look at that. You're giving excuses. If you want to be successful, create solutions. Every person that is extremely successful has created a solution, not a problem, right? They were aware of a problem and found a solution. Same thing with trading. If you continue to keep saying the market's doing this to me, I don't understand my strategy, why isn't it working, this and that, and not figure out a solution, you're gonna keep getting the same result. And 9 times out of 10, the reason why you're not profitable is because of you. Maybe you are having a good win streak, and then you want to size up because you're like doing really well, and boom, you blow up because now you're in drawdown with a size you haven't been able to handle in the past, and you're trying it again, and now you don't want to lose that because it's going to hurt your ego that you're finally doing well. You size up and lose a trade, and then now you got to start from day one again, which is fine. That's part of trading in life, right? And even with that, or like I hear it all the time, the market's got me today. Yeah, there are going to be times when the markets aren't acting correct. I agree. But if that's your excuse every single day, do you not think that gets tiring, that gets old? Like, as a man or woman, you want to be able to have solutions. This is your business, right? If someone comes to your business and they're asking how it's going, and you're giving them 100 excuses on why it's not going well, do you think they want to support your business? They're going to be like, brother, you're not going to make it. You're not finding any solutions. You're just telling me all the problems with no solutions. Everyone has problems. You know what I'm saying? Everyone has problems. Every single day there's going to be a problem that arises. You as a man or woman should find a solution, right? If you want to make it in life, find a solution. That's the biggest thing that I've seen in terms of every successful trader, fund manager, dentist, surgeon, banker. They all know how to find solutions. Imagine you going to the hospital and they're scanning and they're finding the problem and they have the solution, and they're like, yeah, we don't have a solution for you. We can continue to keep telling you the problem every day. You can keep coming back and spending money, but we have no solution for you. You're going to be like, so you got your degree for what? You went to med school to just lay down problems with no solutions, and I'm paying you thousands of dollars? You're going to be like, this is crazy. This guy's on crack. So use that same methodology with trading. Like, if there's a problem, find the solution, right? Whether it take you a day, a month, a year, years, you know what I'm saying? That's fine. This is a journey. You don't need to find a solution in a day with trading. It's going to take some time. It's going to take some time, and that's okay. Because once you find that solution, I've seen traders go from making 10K a year to 100K a year to $1 million the next year to 10 million the year after that, because they found a solution. So, when you think about it that way, like, okay, it may take me a couple of years to find a solution, but once I find that solution, oh, it's up. It's up. But it takes time. It takes time. But when you find that solution, man, you're like, okay, it was worth it. It was worth the grind. It was worth going through the ups and downs. It was worth the experiences. It was worth the roller coasters of emotions. I needed all that. It sucked, but I needed all that to get to where I needed to be or wanted to be, right? So just keep that in mind when you're having bad weeks, bad months, bad years. I've had them all. I've had them all, and I just was like, I just got to be a solution. If this guy or girl is doing it and making 6, 7, 8 figures a year, a month, a day, why can't I not do that? They bleed the same way I bleed, right? They speak. They have the same, maybe not the same exact mouth, but they're a human being. They know I have 2 hands. God bless me with 2 hands. I know how to click buttons. I know how to read. You don't have to be and that's the best thing about trading. You don't have to be the smartest person in the room to be the best trader. You know what I'm saying? That's beautiful that you can make so much money and you do not need to be the smartest person in the room to make the most money. So also keep that in mind as well. Also keep that in mind because a lot of people kind of get in their head, they kind of get down. They're like, I don't know if trading is for me. And you're just going through the struggles everyone else goes. It may not be, some people have their struggles for 2, 3 months. Some people have them for 6 months. People have them for a couple years. It doesn't matter. We're not here to compete with another person. It's you versus you, right? It's your business. You're the fund manager. You're the risk manager. You know what I'm saying? You're the boss. You make the choices. Every time you press those buttons, the only person that will get in trouble for those buttons pushed is you. So why are we trying to compare with the other guys? You should use them as motivation. Like, yeah, I'm going to get there one day. My time and my season will come. It's not right now, but it's going to come there. And then put in the work, 1% better every single day. That's the goal. Get 1% better every single day. Bill Ackman had an interview about that. When he was down, losing billions, he was like, if I looked at my peak, I would have been screwed. He's like, I had to wake up and just imagine or just focus on 1% better each day, right? And then he's like, after 90 days, he's like, okay, I've made progress. I'm here. I'm nowhere. I'm not at the floor anymore. I've made some progress. And then another 90 days, he said, okay, I'm way better than I was 3 months ago, stuff like that. So, I just want you to understand that trading itself, clicking buttons is extremely easy, but trading is hard. It's extremely hard, but it's extremely rewarding, right? And think about it. If trading was super, super easy, would you really want to do it? There's so many things that are really, really easy and people are like, I have fun for a day or two and now I'm bored, right? Trading is challenging. And that's why a lot of people want to do it. 1, because you can make a lot of money for sure. But 2, it's a challenge. People like their brains to be stimulated. People like challenges. People like to, make an analysis and see their analysis play out and make money. So just keep that in mind because I had this conversation with this girl I'm dating, and she's been trading for about 6 months, and she's been trying different strategies. I'm letting her do her own thing. I'm waiting for her to come. Eventually she'll come to me and be like, okay, I'm all in and I want to learn your strategy. But I'm letting her do her thing because I did the same thing, right? I was venturing out, trying to see different people, seeing different strategies, see if that works for me. And I got, analysis paralysis. I took in too much information. And then eventually I was like, all right, I got to throw all this away. Let me focus on one person. Let me see, focus on one guy or girl and that resonates with my personality for 6 months and see how I do versus looking at 18 different mentors, 18 different gurus and trying to learn 7 different ways of how to go long, which is crazy. I mean, yes, that's good to have in your bag years in, but initially you just want to have 1 or 2 ways to enter the market, like, entry models, 1 or 2 ways to break down a market. Like, it's crazy. Like my best friend, I taught him how to trade back in 2016 and he still trades the same way today and is extremely profitable. I don't trade the same way that I traded back in 2016. When I first started trading, I was trading simple support and resistance levels along with trend lines. And I was still making money doing that, And he does that today. And he's one of one of the best traders I know personally. Like, he's like that. He's been like that for a long time, and he's trading support and resistance, retail type of strategies, and still making a killing. And I always thought, like, retail strategies are not profitable. Da, 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 da. And so I started working at KTG and SMB Capital, and I saw all these guys trading retail ways as well, along, of course, with other stuff, but they were trading retail and making a killing. I was like, you just made $2 million trading support and resistance today, making a killing. Of course, they had their own tweaks to it, but at the end of the day, they kept it very basic. Supply and demand, VWAP. Everyone knows VWAP, right? Volume weighted average price. Volume. They're not complicating things. They have the confidence. They've seen the strategy over and over again. Don't overcomplicate trading. Keep trading simple. Once you start overcomplicating trading, it's wraps. Understand that. It's wraps. It's going to be hard to get back into the rhythm. You keep trading simple. My analysis today was super simple for EU today, right? What am I looking at? I always look at price. What is price showing? High, low, lower high, lower low, lower high, lower low, lower high. Yes, it made a higher low, but when you see equal lows for my strategy, I'm targeting that. Even though we made a higher low, this is still a lower high to me. And when we made the higher low, I'm not seeing crazy engulfing candles like I saw before, right? And I already know that we have a news catalyst, and we have EMAs. My EMAs prices consolidating that area. The minute we go underneath the EMAs, I'm short, keeping it simple, right? And I already have a thesis in my head fundamentally. That's just for technicals. Fundamentally, I'm thinking in my head, Fundamentally, I'm thinking in my head, if we don't get a 50 basis cut, from Fed Chair Powell, we're not going, dollar's not falling. Dollar's not falling. EU is falling. If we get, So again, my bad. I just lost my focus. But what I was trying to say is that my strategy is not complicated at all. I keep it simple. I am a discretionary trader that has some mechanical components to my strategy, but I am mainly a discretionary trader. But I have a system. I have a method that works and that is repeatable. You need to have a method that is repeatable. A lot of people that I know that aren't doing too well, they can trade and they'll make money here and there, but their method is not repeatable. I'm like, okay, how did you make that trade? What made you, bro, half your chart is not visible. Oh, snap. Why is it like that? I don't know. I thought I was the one who does not see it. Okay, my bad. That is weird. Okay, is this better for y'all? I'm not sure why it's not showing my entire chart. That's kind of... Okay, my bad for that. Is this better? Okay. So, I guess I have to go back. Yeah, so basically, I was saying, like, we're making lower highs, lower lows, but these equal lows are too clean for me to ignore. It's just too clean. When I see clean lows like this, retail looks at it as support, and it is support, true, but it's also a lot of stops underneath. So I'm thinking in my head that we're gonna grab liquidity because a lot of retail is always like, damn, I'm getting stopped out. The market is after me. That's not the case. They're just chasing liquidity, and they know where most retail traders are gonna put their stops at, right? And that's fine. You know what I'm saying? Again, retail strategies do work. I'm not saying they don't work, but don't be upset if your stops are getting taken out a lot. Market makers understand where the orders are at. They're gonna grab the liquidity and then take off. We haven't grabbed the liquidity yet, but we will. Max myself all time. Why this guy drawing a fib from one Hey, my bad. I'm gonna fix it for the next stream because that is crazy. I didn't know that you can see my entire chart. That's crazy. I apologize. But yeah. How do factors like liquidity, news events, or session time influence your bias? And once you establish it, what makes you stay with or change the bias during the week? So liquidity, I explained liquidity. I'm looking for, equal lows, buy side, sell side, even fair value gaps, supply and demand zones, which, I call this, you might want to, ICT traders might call this an order block, which is fine. For me, I call this a demand zone. Why? Because I learned demand zones and supply zones before I learned ICT, and I still don't understand all of ICT concepts. I just know what I've learned, again, from my mentors, right? I didn't learn from ICT, but my mentors learned from ICT. So, and they showed their own way of it. But for me, I'm going to still call this a demand zone for me, because I know this is where big money is looking at. And in order for you to break a demand zone, you need big volume, right? You need extreme money, you need funds, hedge funds, banks, Citadel, to break it with high volume. And that's what we're kind of seeing right now. This is why I think that we continue to go lower and break these lows and potentially come down to the daily fair value gap over here. My bad. I'm just trying to make sure that y'all can see the chart over here. So this is my game plan. If this doesn't happen, that's okay. I can change my bias. My bias today could be different tomorrow. That's one thing too, as a trader. You can have a bias today and change it tomorrow. You are asking me like, why did you stick with your biases, this and that? Yes, I have my thesis, but nothing materialistically changed for me to change my bias. I'm always big on that, because my boss would always ask us when we would give him a trade idea and we were in a trade, he'd always ask, did something materialistically change? Is there any new news? Did you see, a secondary report? Is there any catalyst? If nothing has changed, then why are you changing the setup? Why are you changing your bias? For me, nothing had changed. We still had the equal lows that we're not taking out at the time. We're making a lower high. Yes, we were making a higher low at first, but overall, we've been making lower highs. We're below the EMAs when I'm entering the shorts. So for me, nothing has changed, and I already had my thesis on. I want to hear that we're at 50 basis points cut for me to change it, because if we do that, then I think EU for sure skyrockets. But if we're doing 25, that's already expected. That's already priced in. So in my head, I'm thinking, all right, well, we're priced in. He's hawkish. Let me go ahead and sell. If I lose on this trade, that's fine. I'm okay with that. I don't think, I'm not the person, I would never say I know exactly what the markets are doing 24/7, 7 days a week. I don't. But I do know how to create a game plan, a thesis, how to execute that plan, and how to manage my trades. And I feel like that's all you need to become a profitable trader. You need to understand how to manage risk, how to manage your emotions, how to create a thesis, execute that thesis, and then from there, journal and repeat the process, right? Again, one more time, right? You need to learn how to manage your risk, manage your emotions, create a thesis. A lot of people create theses and don't execute on it. Like, you come to the desk, if you go to if you work at a real life firm, we would have morning meetings and we create, we'll say, hey, Apple had this news, something's going on, or NVIDIA is doing a partnership with, what's the trade? My boss would be like, what's the trade? That's great. We all read the same news. What is the trade? If you don't have a trade set up, that's just a waste of time. We can all read. We can all see the charts. Cool. What's the trade? Where's your entry? Where's your stop? Where's your take profit? Where do you take partials at? What happens if it is drawdown before the close? You go into drawdown. What happens if you're up 3R in the first hour? Are you leaving your trade on? You take it what I'm saying? What is the plan here? You have to make sure you can orchestrate a plan and be able to tell it to a 3-year-old and then execute that plan. It's one thing to say the plan and have a trade idea, and another thing to execute that plan. A lot of people will talk, have a good game. Show me with your actions. I want to see you risk your money. If you can't do that, you're just talking. And that's a waste of time, and time is money, and I'm not trying to hear that. I hear a lot of trade ideas every day, which is cool, and I always say, what's the trade? We're here to make money. What is the trade? So keep that in mind too when you're doing your morning process. Am I just talking when I'm, your own personal Discord or journal, and you're typing in what you're looking at? Is this helping me out? Because if I'm gonna write all this, I better have a trade idea set and ready. And if I don't, I'm wasting time. Because there's a lot of, you can be a writer. You can go, you can go on Wall Street Journal and be hired as a writer. That's fine. But if you want to be a trader, you better put, some risk on, because that's a big difference. A lot of people aren't comfortable putting risk on, right? That's why you have conservative, you have aggressive, You know, you have neutral or mild, sorry, which is, I guess, same thing as conservative. But you have to be willing to put the risk on. And that's why traders make the big bucks. Think about it. That's why you see these guys, 20s, 30s, 40s, making the big bucks, 50s, 60s still, you know what I'm saying? But it's because they know how to put on risk and they're okay with stomaching the risk, whether it be a win or a loss. That's the biggest thing when it comes to trading is being able to handle risk and being able to manage risk. Big things for real, because you can put on the risk, but can you manage it when you trade? There's a lot of traders I know, they'll risk $10,000. The minute they're down $500, they're out the trade. And it's like, but your risk was 10 grand. Why are you so scared? You should have been okay with that risk. You weren't okay with the risk. Lower the risk. You want to make big bucks. What's good, Marco? My bad. What's good, man? You want to make big bucks, but you're not there yet. You can get there, but you got to train your mind. You got to train your mind, right? And trade the plan. Exactly. Trade the plan. Yeah. I blame social media. So-called gurus on social media make trading look like a complex alien language. Of course, yeah. It's really gatekeeping. It's annoying because trading doesn't need to be that hard. It can be, you know, if you want it to be, but trading can also be extremely easy if you want it to be. It just depends on you and your personality. Some guys really like the complex, you know, type of equations, and they're usually the guys that are coders and making models, and that's fine. If that matches your personality, do that. There's some guys that just are chill and like want to keep it basic, and they still make a lot of money just keeping it basic. So I do agree. That's the worst thing is when you have gatekeepers. Nowadays, it's not as bad as it was years ago, especially with the helps of, you know, Riz and with Words of Wisdom and ChartFanatics and actually seeing these traders trade. And then we have, you know, ChartFanatics Live where we're trading live. This is all awesome and a blessing that was not around 5-10 years ago. So yeah, so much of trading in YouTube. Everyone has strategies. Too much information is as bad as too little. Despite full strategies given free, 95% still losing. It's hard work, which will, yeah, exactly, facts. Bro, half of your chart is now, yeah. Okay, cool. I ask myself all the time, why is this guy trying to fib? Yeah. What do you think on EU and futures side? Because because they're really inside of it. I don't really trade futures right now. I've traded in the past. I haven't traded currency futures though. I mean, I can look for you, but you know, I'm trading CFDs right now. If often use, okay. What's your thought process for determining overall markets bias? Is it mostly fair value gaps, liquidity, like Kyle? Sorry, or do you have a different approach towards bias? Pretty similar to Kyle's in terms of market, you know, daily bias. In terms of fair value gaps, of course, those are usually like my targets, my weekly targets, because I'm looking at liquidity. You know, where do I think price is going to go, right? Where do I think price wants to navigate to or is a magnet to? You know, for example, if I saw, you know, price over here, I would think maybe want to fill in the wick the next day. Okay, can you see? I'm just trying to make this as clear for y'all as possible. You know, I'm really big on, you know, premium and discount arrays. For example, if we were, you know, if we were up here or around this area, I would for sure be looking for shorts because I'm thinking from high to low. We've now pulled back into a premium. We have a doji giving you indecision, letting you know that, you know, the banks, the hedge funds, institutions do not want to push higher for the most part. They've tried multiple days and now they want to roll over. So I would start trying to position myself into shorts and be okay with losing on this trade just because my bias is bearish. And I would go down to the 4 hour, you know, 1 hour and 15 minute for entries. Ideally look for Asian highs to be taken around this day, you know, power of 3 kind of set up, Asia lows to not be touched, and then short, you know, targeting Asia lows, previous day lows, and then, you know, and then forth. My guy Marco, man, how you doing, bro? Chat, listen up, this man. So I appreciate you, Marco. Marco's cold too, man. That's my brother, bro. He's a cold trader, and just his style of trading too is also very, very simple, and he's a very patient trader, right? You can see Marco, he watches videos and he explains it. It's not complex. complexity or complex strategies give room for error. You don't want complex strategies. You want simple strategies that are repeatable. You want to be able to do the same strategy in any market and it work day in and day out, right? It's not going to work every single trade, of course, but you have a game plan and you can execute it with no problem. You know, most traders that I know that are extremely profitable, again, making the 50 million, the 100 million, they have very, very simple, simple strategies that are profitable and repeatable, and they can scale with those strategies. That's another thing too. You want to make sure that your strategy, you're able to scale, right? Because the goal is, of course, start off at 1 lot, then go to 5 lots, then go to 10 lots, then go to 20 lots, 50 lots, 100 lots, possible. You know what I'm saying? So you have to make sure that that strategy that you're using is scalable. Because if it's not, then you need to find a new strategy, right? That's really, really big. Simplicity will naturally bring, exactly, it really will. It really will bring less mistakes, and that's really, really big. In terms of just longevity, because like trading affects your mental, whether you want it to or not. If you're in a drawdown and you're not doing well for 2 weeks, that's going to affect your trading. So you don't want to have to be dealing with that along with a complex strategy that has so many different variables. That's going to make things 10 times worse. You rather have a simple strategy so that you know, okay, well, I've seen the strategy work. Maybe we're not in the right environment for it. That's fine. I'm going to wait for the A+ setup and take that setup versus taking every single setup I see right now, because right now in the environment I'm in, it's not working. That's cool. That's cool. Let me lower my size as well until we're in the right environment for my strategy. Then I can size up. But I don't need to keep trying to double down and get my losses. That's another thing too. When people are in drawdown, they're trying to get the drawdown. They're trying to get out of the drawdown in one trade. That is just a recipe for disaster. Slow and steady wins the race. You know what I'm saying? Live to fight another day. Trade by trade by trade by trade. You don't need to be trying to double down and full port the next trade, trying to recover your losses, because the odds are you're going to be emotionally disturbed. You're going to be emotionally disturbed, and you're going to end up messing up that trade. Even if it does work out, you're going to butcher it because you're already in a drawdown. So your mind is already messed up. It's not clear, and you're trying to hit a home run. And we've all been there. We've all tried to do that, and it usually doesn't go well. And if it does go well, you're building bad habits. That's just building bad habits. Yeah, it worked. It was a trade that worked, but it wasn't a good trade, right? There's a difference between a good trade that didn't work and then a trade that worked but wasn't a good trade, you know? So you have to make sure that you can be able to tell the two differences, right? Because there's going to be trades that just don't work. It was a good setup, you placed a trade, it didn't work, that's fine, on to the next, versus, you know, a trade that it worked, you made money, but that was a horrible trade that, like, 10 times out of 10, or 9 times out of 10, that trade is not going to work out. But it worked out in your favor today because there is luck in trading as well, you know? There is luck, and luck does run out. So, of course, it comes back in too, but you have to, you know, aura farm to get the luck. But no, I'm just playing. Has Mike done a strategy video? I have not. Maybe sometime next year. We'll see. Yes, appreciate your calm. For sure. Hello. Can I participate for the? Yeah, we'll definitely do that. You know, in the next maybe 45 minutes to an hour. We haven't done the giveaway. That was solid. I appreciate you. Thanks a lot. Do you also pay attention to Power 3, no liquidity rate, no trade rule? I do pay attention to Power 3. I don't know the no liquidity rate equals no trade rule. I've heard that. You know, I'm indifferent with my strategy. It just depends. Not every trade I take has to have liquidity being grabbed first, but I am looking at the Asia highs and lows every day for sure, and trying to see, you know, what's been taken out. So of course, if I'm, you know, bullish on EU, I want to get in at the wick, right? So I want to see Asian lows be taken out, maybe it, you know, consolidate at London lows, start making higher highs, and then during New York session, I can get long, you know, into or something. I guess this would be better. Power 3, trying to get in the wick, and then ride the wave, right? That is definitely like an A+ setup for me. Ideally, if I can get in within the bottom wick, that's great. But I'm okay also getting in after the first day, green day. I'm fine with that as well. Because again, I'm not looking for 10 to 1s, 8 to 1s. I'm good with 2 to 1s, 3 to 1s, 4 to 1s. and then on, because I can make multiple trades as well, because we're looking at the daily chart. If you allow yourself to get in drawdown, slowly grind yourself out, I can promise the feeling of professionally trading out of the drawdown is amazing. No home runs. Like, Marco gets it, and that's why he's making the money. He understands it. You know what I'm saying? Marco's been trading for a while too. He's had the experience. He's done all the mistakes that we've done as well, you know, and learned from it. It's one thing to make the mistakes and another thing to learn from the mistakes. If you're doing the mistakes over and over and you're not learning from the mistakes, how do you expect to get better? I mean, and I know it's easier said than done. I get it. Easier said than done. But for the most part, you want to be self-aware when you're trading. Self-awareness, that skill is crucial when trading. If you have no self-awareness, you're going to have a long journey when it comes to trading. But if you have good self-awareness, it's going to be so helpful in your career, because you'll understand when you need to slow down, when you need to size up, you know, when you're not in the right mental headspace. And even then, you know, sometimes you might still make those same mistakes, but that's fine. But again, if you continue to make those mistakes over and over and not change them, then you're the problem. And you have to take accountability, right? That's another thing too. So big on that. Accountability. I'm sorry, I know I'm preaching a lot, but you need to take accountability as a trader, really in everything in life, but especially as a trader. Take accountability. And that goes, I know I talked about it earlier, but I'm just big on that because I am around people that sometimes can do it. You know, they'll take accountability here and there, but not consistently. And you need to do everything consistently, right? You need to go to the gym consistently, eat healthy food consistently, journal consistently, and also take accountability for your trades and everything in life consistently. Your habits will reflect your trading. If you have bad habits outside of trading, you're more likely than not going to have bad habits when you're trading, right? If you're the type of guy that is smoking 4 or 5 backwoods an hour before the open, and you know that smoking, you're not focused at all, right? You're one of those smokers that can't lock in, but you're doing that. Come on now, you're building bad habits, and you're doing that just to get a high, a thrill. Come on now. I'm not saying that every smoker is a bad trader. I'm not saying that at all. But if you know that smoking isn't going to help you with your trading, and you do it right before you start trading every morning, I mean, come on. That might be the aha moment for you. Like, let me just stop trading. Let me stop smoking for a week and see how my trading goes. Or let me stop taking 5-10 shots the night before trading the next day, you know what I'm saying, having a hangover, and see how my trading responds, right? It's just little tweaks like that can make big differences. You know, again, everyone's different. That's another thing about trading. Everyone's different. Everyone trades differently, and that's fine. But you want to make sure that you have the odds against you, and you want to be able to control what you can control. Again, another thing my boss would always say is control what you can control. You can control your entry. You can control your environment for the most part, right? For the most part, you can, because no one's forcing you to hang out with people that are not, you know, helping you with your growth. You're doing that on your own. You can control who you hang out with, who you're around, what you do day to day. You can do all that. And you can control your trading plan. What you can't control is the outcome of your trades, right? And that's fine. As long as we have a plan and we're prepared, we're okay for the outcome, whether it be good or bad, you know? So, and capital, yeah. Well, capital, you can control your capital. You can, because you can work, you get a job, make money, and then you can buy challenges to gain capital. I'm not saying everyone here is a millionaire, you know, but you can control the capital. You can't control the outcome of a trade. But in terms of gaining the capital, you can do that. You know, the opportunities might not be the same as your next door neighbor. I get that. But when there's a will, there's a way. Honestly, when there's a will, there's a way. I actually crawled out of a yearly drawdown after watching every video on Kyle's channel. Hopefully I can become pro. You probably learned a lot in that process as well. And I do believe that you will become profitable if you continue your journey, right? And continue to learn from your mistakes and journal and see what works and what doesn't work. I do believe you can. Mike will let you know when it's time. Yeah, I will. If you allow yourself to, okay, yeah. Man, it's a toxic cycle. If people keep neglecting their mistakes, they'll never learn and grow as a trader. That's facts. Mike, do you ever find a certain strategy works for a while and then stops working? Any tips? That's a good question. And to be honest, I've heard of situations like that where the edge is gone, right? Or the strategy is gone. But I've been very lucky to learn strategies that just don't go away. For example, like the first strategy I learned ever was support and resistance and price action. They've been using that strategy for, I guess, since candlesticks were created, right? So that strategy probably is never going to go away. Supply and demand zones, the markets move on, liquidity and supply and demand. That's not going to go away. But I know there are certain strategies, and where the edge isn't there anymore, and you have to learn a new strategy. But there are strategies, in my opinion, and this is my opinion, doesn't mean it's fact. My opinion, there are strategies that are timeless, and I've seen it. Like my strategy, I've back tested my strategy in the 70s. You could use it in the 80s, right? And I'm sure same thing with Marco. The same strategy he's teaching right now, I'm sure you can go to the 70s and the charts. Honestly, let's go see how far back this goes. Sorry, let's go in a month. All right, we're in the, oh yeah, I can't see much. There we go. So this is 1983, right? On the monthly chart, you can already see we're in the 80s, right? And if you went to this is Apple in the 80s. And you can already see potential trades. Literally can see potential trades. I would say one right here, a sell-off, right? Monthly inverted fair value gap. Boom. We break below, cool. If you miss the trade, what we do next? Use the high to low. Can you see it? Okay. Do I need to zoom in? Jeez. Remember, we're in the 80s right now. Right? Cool. And this is on a monthly chart. So if I broke down, I would definitely find more precise trades. Because there's two ways, of course you could have said over here as well, but I'm just using this. And it's like, okay, well, I missed that trade. That's fine. Let's use our fibs from high to low. Between 50 and 79% for shorts. Remember, I just look for 2 to 1s. Stop loss above 79%. And we would have had, this is right here is almost a 4 to 1. Let's just say 3 to 1 trade right here, right? And imagine if you're an investor that has big bucks, okay, cool, right? I want to invest $1 million. Took some time, but I made, $3-4 million on this trade. And even with this trade, you can make multiple trades. This is months. This is months, right? This is just for a swing trader. This is one strategy that I use. Apple shares were less than $1. It's crazy, huh? Crazy times. And I look at, yeah. So, and this is in the 80s, right? This is in the 80s. Even here, supply zone. Remember I told you I learned supply and demand zones first. Or you can call it, if you want to call it order block, fine, supply zones. We're in a premium as well. Keep it simple. You don't have to even go short here. You can wait for the first red candle, right? On a monthly. You have continuation, right? There's so many, I'm like, and we can go in the 70s. I promise you, you can see trade setups. We can go over here. Man, Apple used to just consolidate. This is disgusting work. But even then, you see the fair value gap. You see every time we tested a fair value gap, you could have created short. You could have made short trades, and been a killer trader in the 80s. You know what I'm saying? Making money every time price came here. Boom, every single time. And then boom, I'm trying to see. Oh yeah, this is beautiful here right there. Oh, this is a beauty. Supply zone, premium, low to high, we're above 50%. You know what I'm saying? Roll over, target the lows. We have trendline liquidity. So we know that price wants to go down here. This is in the 90s, before I was even born. I'm a 95 baby, 90. This is literally, like, my kids are gonna know, I'm gonna teach them the strategy because it's probably gonna work in 2100, you know what I'm saying, 2085. Like, we're back, like, we're literally back testing the 90s. And the strategy works. And you see the strategy is not even like, of course I'm not going super in depth because we're on a monthly candle, But you can see for the most part, you can make money in the 90s and the 80s and 70s if you keep your strategy simple, right? You see fair value gaps, supply and demand zones work. I could have drew, certain levels for support and resistance, um, you know. So let's see. My bad. Let me go back to the chart and read. Would you agree that sim trading for a long time, where you have no pain of losing money, will grow you a bag of bad habits as you throw trades away 5 minutes without much care, and it becomes a habit? If you trade that way, yeah, I can see that. It just depends. Sim trading can still be emotional when you're funded because you're looking for a payout, which is money. So yeah, in a sense, yeah, it can be. It's not the same as. It's still very similar as trading live, right? The only difference, honestly, there's a big difference between. I'm not even gonna say that. I'm not gonna even say there's a big difference. When you're trading NQ, yeah, of course, because liquidity issues. That's the main differences, and maybe execution prices and stuff like that. But for the most part, trading is trading. Whether you're trading sim, I don't recommend trading demo for too long. As in, if you're trading demo when you're first starting off, for sure, trying out your strategies. But like when you say trading sim and you're funded and you're trying to get a paycheck, there's still emotions involved, right? Yes, if you blow the sim account, that's fine. If you're trying to think about it in that way, but ideally you want to think about it as a professional trader and have longevity and want to build a track record so that you can attract money. I know not everyone is trying to manage other people's money, and that's fine. But I guess it just depends on like how you look at it. It probably won't hurt as much as you risking your own live money. We know that for sure. But there's still some pain when you're funded. When you're doing a challenge, I don't think there's, unless that's your last $100 you use for that challenge, then it's gonna hurt regardless. But for the most part, if you have money to blow on the challenges, it doesn't hurt as bad versus the funded. Especially when you've worked really hard to get that funded account and you're just straight BSing and you blow that account. Then it's like, that was all for nothing. I paid this. I spent maybe a month, 2 months max passing the phase one and phase two, or phase one with futures. Get funded, thinking I'm about to make $10,000 a month, and boom, I blow the account. Like that. That's a lot of pain. So, I always say to try to, keep it professional, because again, this is your business. This is your company. You are the manager, the risk manager. You make the rules. You make, you have a process and you want to follow that process and be able to replicate that process just in case you, in the future, really do have your own business and firm and you want traders to trade very similar to your style, or your methodology. You want to make sure you can explain it with ease, Mike, do you think the market makers use setups like ICT strategies to generate more liquidity for the institutional traders? Do you think market makers? I wouldn't necessarily say they use ICT strategies. I just feel like ICT strategies line up really well with institutional traders, right? Like, they're not calling, this a fair value gap. They can see the engulfing, and they probably know. They look behind the scenes and see that there's auctions that haven't been completed. They look at it that way. There's just a word for it. It's fair value gap is what we are using. But in reality, they're not looking and saying, hey, that's a fair value gap. They're just looking at the auction, right? They're looking at their book and seeing, okay, these trades, is there imbalance here? Let's fulfill these orders. Or, hey, we're seeing all these stops and we need liquidity and stuff like that. Let's go target that to grab liquidity and head lower, right? They're not saying I'm using ICT strategies. They have their own strategies. It's just that ICT lines up with the strategies. The same thing as Fibonacci ratios lines up as well. ICT didn't create fibs. He uses it. It's part of his strategy, but fibs lines up with ICT strategies. That's a confluence. But again, and also these words are just rewraps, right? Like, there's probably another word that other people use way before ICT even created the fair value gap. There's probably another word that was used back in the 70s and 80s for this exact, movement or, pattern. Or same with, order blocks. Remember, I was saying I learned supply and demand zones. Those are the same things as order blocks. Maybe it might be a little bit different, but for the most part, they're kind of the same. If you think about it, just different words. So, Yeah. All right, let's go to gold. What the fuck? Sorry. What the freak? All right, all right. So, if you're, checking, if you were in my tab, I guess, on ChartFanatics Discord, I've been talking about long gold. How did Big Michael Huddleston discover all these terms before anyone else? John, you have to ask Michael. Or Mike, sorry. I don't know. I don't even think, who knows, who's to say that he discovered all these terms? Of course, yes, okay, online, we learned it, but a lot of guys that understand the markets to a T like that, they're not going online and broadcasting what they've learned. You know what I'm saying? Again, back in the day, gatekeeping was a normal thing. Even my boss was like, if you have a good strategy, why are you sharing that? So exactly, he just renamed them, exactly. So, and there's a lot of traders we'll never hear about that are making hundreds of millions of dollars, and they would never expose their strategies, nor would they want to be interviewed. We don't know. So he's just one of those guys that was smart. He understands the markets, and he wanted to share his knowledge. So, but anyways, with gold, what I've been looking at is that we are holding this daily fair value gap, right? And this right here is kind of, I think that we potentially might have hit the low. I'm not sure yet. I guess we'll see by next week. But yeah, I mean, this is beautiful right here. We hit the low on the daily fair value gap. We break, market structure, break a structure, make a higher low from low to high. I'm not using my fibs. I'm just using my cursor. Okay, y'all can see. Dang, every time. Sorry, y'all. So daily fair value gap, as you can see, price respected it very well. So that's the first alert. Then we get a breaker structure, second alert. Now I'm using my fibs from low to high, right? I already got in my first position once we hit the fair value gap, because on a lower time frame, we had the breaker structure, and we know price is fractal. Whatever happens on a higher time frame happens on a lower time frame. So from low to high here, during FOMC, I guess that was yesterday, right? I mean, of course it was yesterday. We hit a discount, and now we're continuing higher. And if we do close above and break this previous high, I mean, we probably continue to go up at least to 4100s, right? 4100s first. And then from there, we have to take out these fair value gaps. So it has a journey, but it can do it. If it has enough buying power, it can blow straight through. And usually if you're bullish, an asset or a security or whatever, or commodity, doesn't matter. But if you're bullish, you want to see these fair value gaps get invalidated. You don't want to see bearish fair value gaps work when you're bullish, and vice versa, right? If you're bearish, you don't want to see bullish fair value gaps be respected. He renamed supply and demand as order block. I don't know if he necessarily renamed supply and demand as order block. I just know it as supply and demand zones, but I know other people call the same zones that I highlight as supply and demand as order block. So you can take that, I'm not going to say he renamed it as order block, because he may have some certain different, I don't know. I've never really watched all of his videos. I watched a couple, but I don't know. His definition of an order block could be different than my definition of a supply and demand. So to me, they look similar, but he may have some couple nuances that I'm not aware of or familiar with. So, but at the end of the day, it doesn't really matter as long as you're making money, right? With the strategy is it doesn't matter what strategy you trade as long as you're making money with it. Do you have any videos on your playbook going over your entry and exit criteria? I am trying to do more on my, I'm building my brand and trying to, I have a couple of videos, but I haven't, I'm going to, in the future, push my YouTube channel a lot. I'm still in the process of doing that. Really just following Briz and Marco and Tyler and all them. I really like the content that they put out, especially Marco, in terms of trading wise. I like watching Marco's videos a lot, and I like how he explains things really well. So I want to do something similar in the future. And then, of course, with Riz is the guy's a boss. So I just love how he is organizing a team and having multiple channels and stuff like that. It's really cool. But 2026, I have a lot of big plans. Right now, I'm just trying to continue to put my face out there more, and you're seeing me more, and show the way I trade on here, and also talk in the Discord, explain my trades, and so on. So it's all a process, right? What do you think about gold? But anyway, so I am bullish on gold, especially if you break this highs, which a bullish engulfing. We'll see. It's 5 o'clock. You would think that, I guess 5:30, but we'll see how this plays out. But yeah, I am bullish on gold for now. Doesn't mean it can't roll over. It could definitely do that, but what we're seeing right now, we got a higher low. If we break the structure, just price action, higher highs, higher lows. So just be mindful. Would I get long here? No, I'd probably wait for a small pullback to get long. And I'm already long gold too. I'm long from 39.27. I plan on swinging it. I think we go higher. I think we go to 5,000 by January, if not before, but we'll see. That's another point. Why do successful traders post their winning strategies and do YouTube channels, do get little payments instead of focusing on their trades? It just depends. Some people just like to be out there and want to share, and trading is a lonely game, so it's cool to share what you know if you're not afraid to share your strategies and talk to other people and collaborate. Everyone has their own reasonings. It's also another stream of income, because trading as a sole income for the guys that are successful, it's cool, but it doesn't mean that they're winning every single month. You can be a profitable trader and not be green every single month, right? That's a normal thing, super normal. I think over 80% of traders that are profitable aren't green every single month. That'd be great. It'd be ideal, but for the most part, the traders I know, they weren't green every single month. There might be years where you are green every month, but you still want to diversify your income, right? You want to diversify where you make your money. You don't necessarily want it to all be from trading. If it is, that's cool, but you want to have multiple streams of income. You always, just in case. So YouTube could be a revenue, you know what I'm saying? Just other different things you can do. But at the end of the day, of course, you want your main income to be, it depends. Ideally, you would want your main income to be trading, because if you're a really good trader, then you should be able to have your main income as trading, but you also want to be smart and diversify your income. Me too. What? Rooting for you, I appreciate it, man. I appreciate it. Yeah, some incredible stuff is coming for our viewers. Hey, you hear it, ChartFanatics. Some incredible stuff is coming for our viewers. So stay tuned. Make sure you like and subscribe, and let Tyler know that I'm here. I'm here to stay. No, I'm slaying. I like Tyler. I like Tyler a lot. He does not play about his duck races. He will stab you if you play around with his duck races. So I think he streams tomorrow, maybe, or I don't know if he streams tomorrow. Tomorrow's Friday. I think he streams again next week. So let him know that Mike is aware that he's not playing around with his duck races. Is there a significance with the 8-hour and 12-hour time frames that you're using? I wouldn't say a big one. I don't use the 12-hour as much. It's just cleaner price action. I use it every now and then. I use it today, but I usually use 8-hour more. I only have the 12-hour on because Kyle uses it as well. I use it every now and then, but I use the 8-hour more than the 12-hour. But I don't think there's really a huge difference. Tyler's the original duck dodgers. Yeah, he really is though. He's a funny guy with a lot of energy, and I'm like, bro, I wish I had that much energy. I have energy like that when I'm boxing. I've been boxing for, I don't know, almost 8 years, and yeah, I love the ring and I have that energy. But when I'm trading, I'm more chill and relaxed, man. I look at my Apple Watch too to see what my heart rate's at. I'm usually trying to be between 55 to 60 beats per minute, ideally, when I'm trading. And if I'm over 70 to 75, I have to get away from the screens and calm down, right? I don't want to have anxiety and adrenaline when I'm trading. I want to be calm and focused and sharp-minded, but I'm not saying he's not that either. He's definitely locked in. When he's locked in with trading, he's locked in, but I'm just saying, for me personally. Tyler owns the duck races copyright. Facts. Facts. That's funny. Are there any more questions? Anything, any stocks you want me to look at? I also mark up stocks too. Been marked up. Tesla, so far, still going, any asset class really. What's good? Nvidia, I marked that up as well. Nvidia was beautiful though. This was just a beautiful trade. Insane movement. That's one thing with stocks though. You can have these 10-to-1s and you can have some big trades. Silver. All right, let's go look at silver. I'm gonna look at silver in a little bit. Silver is interesting. All right, so here's what I'm seeing right now in silver. We have now mitigated the weekly fair value gap. Sorry, I'm just trying to look. All right. So you can see, we mitigated the weekly fair value gap, which is good. Shows you that we've filled that imbalance, and now, buyers are in the market. We've now inverted as well on the daily. So inverted fair value gap right there. So what would I be looking for targets? For sure. Target 1, I see we're approaching. On an 8-hour. And then again, we have to, let me go ahead and delete that. This is the big boss right here, right? We have to see what price does at this 8-hour fair value gap. Ideally, if we're bullish, it should blow past it, right? It should make higher lows. Should do something like this. Boom, make a higher low. Come, take buy side, higher low, continue, higher low, breakthrough, right? That's what it should do. If we're bullish, it should do this. If we're not, we might get a higher low or a lower high, higher low, grab liquidity, and then drop down. But we'll see what happens around this area. But for now, we should continue to climb higher. This will be an interesting area as well for buy side. We'll see what happens here. But it's looking good. And tomorrow is Friday, so we'll see what happens. Some pairs are going higher. Yeah, so it's a good question. How do you determine weaker / stronger currencies against DXY? For example, we're bearish on DXY, but some pairs are going higher, some going lower. So one way I do it is I have a currency strength. I use things called currency strength. Let me see the app name on my phone. It's called currency heat wave. I look at that to see the currencies and their strengths. It's just an easy way to look. And then another way, with DXY2, the markets are kind of decoupled, so it's kind of tough. Usually you want everything to flow, but I would say I use currency heat wave. And then I'm focusing if I'm in environments like that, then I'm just looking at the daily charts, right, to see how EU and GU and AU and NU are looking. And whichever one I see makes the least amount of sense, I'm avoiding by all means, right? The one that makes the most amount of sense, that's gonna be what's in play. As in my head, it's like, what is it in play? If EU or if AU is heading higher and the dollar is also heading higher, then AU to me is not in play because it's not in line in what I like to look at. I base the dollar, I like a DXY when I'm looking at USD FX pairs. So if they're not matching and they're not in line, I'm just not gonna touch that currency pair. I wanna make sure that the currency pair I'm touching is in line with the dollar, right? So for example, GU has been weaker than EU. GU would have been the play, but GU is already deep to me and discount, so I chose EU. But ideally, you want to choose EU because that's the weaker currency if you're short bias. So yeah, it's mostly discretionary. Exactly, yeah. That is my style too. But I guess, yeah, for the most part, it's discretionary. You're right. Something, okay. I know what SMT is, but I don't use SMT. I guess not in the way that it's explained, maybe in my own way, but it's not part of my strategy, but I have friends that use SMT and they do really well with SMT. It's midnight where I'm at. Wow. It's nuts. Let's see what EU's doing. So EU right now, see, it's just consolidating. What I wanted to see, which is good, what I want to see is get up here to 1.15, sorry. 1.15756. Ideally, we go up here and then we roll over. This would be a nice trade to have on stream. We'll see if that happens. Probably not, but we'll see. In terms of gold, let's see what gold's doing. Yeah, gold right now, I wouldn't be looking for longs until maybe it's 2 areas I'm looking at. You know, if we test this fair value gap, that might be a nice area because we have trendline liquidity as well. But even then, this is not a high, like if I had to rate this trade, this would be a B minus. An A plus trade to me would probably be going long in this area. Not even A plus, like an A, I'd say, would probably be long in this area. But this would be the first point of interest and second point of interest that I would look to go long for gold if I wasn't already long, right? So we'll see. It doesn't have to come down here. It could just continue going higher and that's fine. But I'm not chasing gold. You know, I'm not looking for longs when we're in a supply zone. Or if we're in a premium, if you use this PDA, you know what I'm saying? I'm not looking for longs. I'm patient. No, you're good. I like the questions. You know what I'm saying? I want y'all to ask questions. I'm here for y'all. I'm like, do you just use the last daily swing high and low for determining discount and premium daily range? Was it the 20-day, 40-day, 60-day? Yeah. Do you just use the last daily swing high and low for determining discount and premium? For the most part, that's also discretionary as well. But for the most part, yeah, it is. I mean, I do. It is. It's crazy. For the most part, I do, but that's discretionary too, you know. It just depends, yeah. So even then, like, I would use this low to this high, right? Because this is where the impulse started. I mean, for this leg, right? Or I guess you could say this is really, no, I'm using this low to this high. Because I'm saying maybe this, but this is just, to me, it's not where the impulse, we start seeing true heavy buying. Of course, this as well, but you could use, I guess you could use this low, this low, this low. For me personally, I'm using this. Why? I don't know, more so intuition, experience. Can't really explain. There's some things that you just can't explain and that you just do, right? And that just comes with time and experience when it comes to trading as well. And that's what makes trading sometimes a little difficult. And that's why I am not a purely mechanical trader, because I'm sure a mechanical trader would have a different process than me. I'm more discretionary, I have more intuition, more feel, but it's, again, I've been trading for almost 10 years. So for me, I'm gonna use that low to that high. And we're, you know, doing that. I can see that we're in a premium. So of course I'm bullish on gold. Do I think gold continues to go up tomorrow? I don't know. But if it does make a higher low, I'll enter for another trade for sure. You know, so it's just really just being patient and seeing what gold wants to do, because you understand that once gold gets going, you have time to make multiple trades within that. Even if gold comes up here, there might be a fair value gap, it might pull in, boom, you can keep going. So I'm not ever in any rush to get long gold. I just got long down here because we're in a daily fair value gap and it's part of my plan. So just the correct impulse legs and higher time frame charts. For the most part, yeah. Mike, how do you get into trades once in a higher time frame fair value gap? Okay, so, you know, for example, with gold, I got alert that we're in a, you know, fair value gap on a daily. I was like, okay, cool. I wanted to see two things. I saw this fair value gap. I wanted to, one, see this get inverted, which it did. And then I wanted to see it come to a discount. So we got the inversion here. Actually, let me just see if I can just do it on somewhere else. It's not the same. Damn, I figured it wasn't gonna be the same. And I use Oanda too, so, you know, you get different kind of candlesticks with different brokers, which is annoying. I know I could just use gold's futures, but I've just been using Oanda for so many years that I'm just comfortable with them. And they're a regulated broker in the US. So anyways, we got an inversion. And then I was like, okay, cool. Well, I want to see us get into a discount. So I'm using my fibs from low to high. And honestly, anywhere between 50% to 79% is where I'll go long. And what I did is I saw that we were wicking, because I'm watching now at this time, because I'm getting an alert. Once we get below 50%, got an alert. I think this was, Tuesday. But I actually didn't, no, I didn't get long on Tuesday. I'm pretty sure I got long around this area. I'm trying to think. I remember when this happened at the open right after, yesterday. So I did start a position afterwards around up here. It was just 39.47, but my first position was up here. As you can see, my breaker structure, lower, you have your lows and then you have your breaker structure on, can't see the chart. Yeah, Anthony, I'm gonna need help next time on that. I don't understand why it won't show my whole chart. It's weird. Okay. Y'all can see it now, right? Can y'all see? Before I begin, I don't want to keep going if you can't see it. Can't see the whole screen. It's fine. If you can see this area, that's cool. That's cool. Because I don't know what's going on. Okay, cool. So, awesome. Thank you. So we have a breaker structure, right? We're making lower highs, lower lows, lower highs. I guess the first breaker structure you could say was over here. For me, it was over here. I called it the breaker structure. And we also had an inversion right over here. So I was like, cool. So I used my low to high, my fibs, low to high. Anything below 50%, boom, we tagged 50%. I didn't get in at 50%. I wait for the close on 15 minutes. So I got in at 39, I think 27. So it was around this area. I saw buyers coming in, and then I was like, okay, this looks good. I was like, I think we break these highs. So I started my position, had my stops at 38.95, like around these lows, and then continued, that's the first position I have. And then I wanted to get in again for a second position to build my long position. And I got really, really lucky because I was thinking about adding to second position around this level. And I was like, nah, it's not looking too good because I didn't have an area. I didn't have a plan. It didn't make sense. I was like, I'll wait to see if gold will come back and make another higher low, which it did. And then I didn't get in down here. I waited for the candle to confirm that buyers were in. So I waited for the 15-minute to close with the wick, giving me an indication that sellers tried to push down, didn't have enough selling power. Buyers are coming in. So I started another small position here, and then my stops were below here, 39.05, and then just been continuing to go. I almost got stopped out, as you can see over here. And my first entry, my stops, I think right now are like 3,900 around here. And second position, my stops are currently at like 39. I think it's like 39.10 now, or 39.15. But I'll probably continue to add on the way up, and if I get stopped on these positions, that's fine with me. I will trade again on to the next trade. But this is just showing you kind of my entry. I'm using really price action, lower highs, lower lows, breaker structure, looking to get into a discount from low to high using my Fibonacci's. I don't use Fibonacci's every single time. I can see with my eyes if we're at 50% or below. I'm just showing you because you're asking me, like, what am I looking at? But I don't have my fibs on all the time. I just know this is a nice higher low. This looks like we're below 50%. We're in a discount. There's probably a fair value gap in this area, but even then, I'm waiting for a blue candle to show me, that buyers are in control. Yeah. Perfect, complete swing low that broke after trading into a higher time. Exactly. So, yeah. So that's how I got into my positions for gold, and really how I get in positions for most of my, that's just one trade entry. I have multiple. Again, been trading for a while, so it's good to have that in your toolbox. But for the most part, that's how I'm looking at entering a position. I hope that helped. And yeah, I think also, again, let's see what's going on over here. Yeah, see, we'll go with dollar. We'll see if we make a higher low and then continue higher. See what EU. EU's just not doing what it wants to do. Okay. I think it is finally time for a giveaway. So let me talk to my boy real quick. Let's see what we have to give away today. Give me 1 second. I'm talking to my boy for the giveaway, you know what I'm saying? Trying to hit the plug. All right. He said, let's do it. Got the green light, got the green light. What are we giving out today, brother? So we got, okay. Today's good. We got one Apex. You know what? Sorry. Okay, so I'm gonna need the chat to hit exclamation point join to sign up for the giveaway. We're giving out 3 accounts today, which is good. Exclamation point join. Let's do it. We are here to give away. I appreciate y'all for staying in. You know, I know sometimes this can be fun. Sometimes it can be informational. Sometimes it can be a mixture. But it's a lot of good knowledge that, again, I wish I had back in the day. There we go. Remember, just once. Oh, yeah. The chat's popping now, huh? Y'all heard giveaway. Everyone's awake, huh? I'm just playing. There we go. Hit the join. Hit exclamation point join. Let's do this for another minute or so. We're giving away the big bucks. Let's do it. There's more comments than people in the street right now. This is crazy, huh? It came out the woodworks. Like, what? Insane. Okay. All right. I think that's enough time. What do you think, boss? Wild awake now. Hey, crazy. Yeah, just printing the. Okay, cool. Okay, awesome. All it takes, huh, is a giveaway. But I feel it though. It's actually some pretty good giveaways. That's one thing about this channel too. That's really cool that we're able to give back to the community every time, and I mean that's awesome. It's really a blessing because 1 second. Okay, ladies and gentlemen, are we ready? First up is an Apex account, I believe. Yeah. All right, Borosum types in 3 times. I don't know. All right. Oh, my bad. I didn't mean to. You still need it? Okay, you good? Okay, cool. All right. 3, 2, 1. Gira Jam, congratulations. Gira Jam, could you please come to the front? Gira Jam, Gira Jam, Gira Jam. Is Gira Jam in the audience? Are you there? Are you alive? Gira Jam. Gira Jam, Gira Jam, Gira Jam, Gira. There we go. Gira Jam, thank you so much. Thank you and congratulations. You have won an Apex account. A 300K Apex account. Jeez. Use it wisely because that can change your life, you know? For real. Use it wisely. Awesome. All right. This next one is for Funded Next. Funded Next. Let's do it. Let's do it. Let's do it. All right. Let me go ahead. Remove. We ready? 3, 2, 1. Let's see. Let's see. Let's see. Let's see. Let's see. Alpha tickers. Congrats. Alpha tickers, come on down. Come on down. Awesome. This is awesome. This is awesome. As Alpha tickers in the audience. Alpha tickers. Tickers alpha. Alpha tickers. Alpha tickers. Yo, what's good? Congrats. You have won the Funded Next challenge. All right. You small risk with the accounts. Yeah, for real. Congrats, Alpha tickers. All right, this is the last one. This last one is for Alpha Capital, which is crazy. Alpha tickers, you were just one away, huh? Alpha Capital, all right? Are we ready? 3, 2, 1. Let's see. Chris McDaniel, 2861. Chris McDaniel, 2861. Can you please come to the front? Chris McDaniel, 2861. Please come to the front. You are a winner. Is Chris McDaniel in the audience? Chris McDaniel, 2861. I need you to come. Oh, here we go. Hey, congrats. You have won an Alpha Capital Group Challenge. Awesome. Again, the 3 people that won today, do not rush the process. You've been given an opportunity, a chance to change your life. Really though. This is step 1, right? Treat this as your business, pass these challenges, get payouts, and continue to grow, right? Continue to grab more capital, pass more challenges. Again, I appreciate everyone that tuned in today, to take in all the knowledge, because I wish I had someone being able to answer questions live with me, when I was on YouTube like that. I was taking in too much information from everywhere, and it really put me back. So I really do hope that y'all take in the information here at ChartFanatics and really apply, right? You don't have to take in everything, but stuff that resonates with you, take it in, apply, test it, see how it does for you. If it works, keep it. If it doesn't, just, throw it in the trash. It's fine. I go live every Thursday at 3:30 p.m. Central. So hopefully we have another great week next week. Again, I appreciate y'all for tuning in, taking the time out your day to watch me speak about the markets. I'm very passionate about the markets. I love the markets. I plan to learn every single day and be in the markets for many, many more decades, God willing, and make a lot of money with y'all. Make sure to please like and subscribe. Before leaving, it helped our channel a lot because we want to continue to grow and expand and give more giveaways, right? The bigger we grow, the more stuff we can give out. So, and don't forget to join the Discord as well. But all right, y'all, I will see you later. My boy can take over from there.